Hi, this is Mike Swanson, WallStreetWindow.com. I've got a very special guest with me today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing, Dave?
Good, but I disagree with you. I'm not that special.
Okay. Well, the markets are interesting this week. As we're speaking, the Dow is at a 52-week high, and earlier this week we saw defense stocks take off. Boeing made a new high, and Boeing is in the Dow, so that has helped it. But today, bank stocks are going up. They had a big day yesterday, and here's the XLF ETF, and JP Morgan is on a new 52-week high. That's in the Dow. So it seems to me like, the tech stocks are lagging. Facebook, of course, it blew up. Netflix was actually down this morning, and many of the fad stocks of the past aren't doing that well. But money is now shifting into bank stocks, and if the market's going to continue higher, I think the bank stocks are probably going to lead the way. What do you think?
Um, yeah. Well, the thing about what's going on with the bank stocks is the long bonds rallying a bit today. The yields are down, but with that yield getting back over 3% on the 10-year bond, they are again getting a little steepening in the yield curve, even with the Fed probably raising rates next week. So when you have the steepening in the yield curve, for people who don't know, the banks usually borrow on the short end and then lend out on the long end. Like you had a mortgage, I have a 10-year mortgage. People in the States have 20 and 30-year mortgages, so they borrow long term, and the banks borrow the money from kind of the Fed window in the short term. So if that starts to spread, that really helps their margins. So yeah, I can totally see the bank stocks continue to rally if, as long as this long bond kind of backs up a bit. But the long bond is also kind of like a catch-22 in that it kind of it can back up and help the banks, but it can't back up too much, because if it backs up too much, mortgage rates will get too high. People won't want to borrow. It would also hurt the borrowing costs of the government. So I think the bank stocks have this kind of thing where, yeah, if interest rates go to 3.25 or 3.5, that's actually fine. I'm looking at the XLF right now. It's breaking out, as you're saying. That's fine, but the problem is if we go to 4 or 5%, interest rates will probably get so high that people don't want to borrow anymore to buy homes, and it will really hurt the government budget as well. So I think you're kind of in this happy medium right now where the interest rates are, remember the story of the three bears? Interest rates are just right? The porridge is just right. That if they're a little bit higher here, you got you get the yield curve a little bit steep enough where they can make money. But if those rates go too high, there's going to be no lending anymore.
Well, when it comes to stuff besides bank stocks or the Dow, what's got your attention this week in the financial markets?
Well, there's a couple things. I think with interest rates, there's a trade that you and I have on where we're short these investment grade bonds, right? So these kind of lower yields, like triple or A rated bonds kind of thing, right? And what's interesting about that trade, I really think nothing's sure, in life or like investments, but I really like that short for two reasons. Number one, if there's some kind of big tank in the markets and the economy, if you go look at the history of investment grade bonds, they usually then disconnect from government bonds and go down when there's a recession in the economy, because companies obviously are seeing less revenues, less profits, etc. Right? So even if the long bond were to rally, I think if there's a rollover in the stock market, those would be hit. But also, if there's this continued backup in yields on the long end, well, that means that you're going to have increasingly higher yields in corporate debt to compete with that, and then that will roll over as well. So I'm looking at that trade as being really interesting here, because I think either way it works out. And the second thing is, look at we invested in a deal that's now done quite well. Both sold out a little too early in the cannabis sector, and the cannabis stocks are now kind of starting to act like crypto was late last year. And I'm also looking at that because I have another.
Well, you really see that in Tilray. It's going crazy.
Well, look, the one thing about what I've learned, don't short stocks like that. I know it's down 18% right now today, but come on, like no one can time these things perfectly. And anyone who shorted that thing at 40, 50, 60, 70, 80 has now been slaughtered. So don't try to short these things. You know, parabolic curves are impossible at the time, and the whatnot. So anyhow, crypto is probably the weed is probably becoming a bit of a bubble, like crypto was late last year. But the valuations are still high. I have one deal that is going to come public probably within the next few months. I bought it pre-IPO, and I'm waiting on that. So I'm just watching these stocks because even if these stocks drop 50% from here, right, they're still at such big valuations that this pre-IPO deal I bought it's called Anahit, should come out at a nice level.
Well, we both did really good on the FSD Pharma deal. We bought that towards the end of last year, and I can't load it up on here because it doesn't show up on stock charts. But
it's huge. CA.
Oh, it does?
Yeah.
There it is. Okay. Well, I'll load it up. There we are. So yeah, we bought it,
at 3.8 cents.
3.8 cents and sold it, and more than like quadrupled our money or something, and we're happy. And now look at it; it's just amazing how much it's taken off. But that's that's the fun thing about deals is when you hit a good one, it's easy to double or triple your money, and if it's incredible, it can do even more than that. And there's nothing more hot now than the marijuana sector.
Yeah, well, I think what's interesting about the marijuana sector is two things. Number one, you're kind of in the early stages of this, and number two is, look, I had some crypto investments, but I'm not a huge believer in the whole cryptocurrencies. I tend to agree with the Wolf of Wall Street guy that a lot of this stuff is just frauds and excuse my language, bullshit. And but the thing about the weed stocks is this is going to, it's probably going to replace cigarettes in a lot of areas. The FDA actually is legislating a huge drop in the amount of nicotine that can be put in the cigarettes in about 3 years' time. So that nicotine is what makes cigarettes addictive. So why would anyone smoke cigarettes? They're probably going to move to smoking marijuana, right? So, and then of course you have the medical aspect of it as well, and you're going to have institutional money come into this, and the total market cap of the whole sector is only about like $100 billion, whereas at the peak of crypto, the total market cap of cryptocurrencies was $800 billion, and crypto's still over $200 billion, even with the bust. So that just tells you the kind of like small size of the sector. Now, I'm not saying that continue to go higher or parabolic or whatever, but I'm just telling you in terms of the size of the bubble or of the move right now, it's still a lot smaller when compared to what happened in crypto late last year.
Well, one thing about parabolic curves, as you put it, and bubbles, sectors, and so forth, is the crypto thing, went straight up like this Tilray chart in November, December, then went straight back down, and all the coins did the same thing. I mean, straight back down within 4 weeks. And stocks really aren't going to do that. Like, they don't go straight up and straight down that fast for the most part. I mean, they really don't. Because there's more to them than there are cryptocurrencies, which are, I call it virtual paper. It's backed on nothing. It's based on nothing. And there's really, I think it was a lot of manipulation. And the conclusion, takeaway from this, I think is important, is that at some point, these marijuana stocks are going to top out and go down. But I don't think you're going to see a stock like Tilray go straight down in 4 weeks like it went straight up in 4 weeks. It'll take months. Stocks tend to top out over weeks or months, then roll over into bear markets that can last a long time. They just don't go straight up and straight down. So I think this marijuana trend is something that's, even if this stock here topped out now, the whole sector could remain at elevated levels for the rest of the year. It's not going to trade like a cryptocurrency.
Well, if you look at weed.to, that's a kind of a leader, right? Even though Tilray has gone crazy recently, now has a larger market cap, weed.to is really the biggest, most developed company in the sector. And you look at that chart, well, probably what would happen is even if it started to bust, it would probably go down back to the 200-day moving average, which is about $36, about 65 now, probably bounce off that average for a little bit, and then, roll over. And remember, like, weed.to before the last couple of months had never been over $40 or, $30 to $40 a share. So, like, the fact that like now you're talking about maybe it will go down to 30 or 40 is not really a big year. And by the way, when I started getting interested in the cannabis sector last year, and I visited the plant that FP Pharma, huge, was putting together just north of Toronto, weed.to was $12. Now it's 65, right? So that just tells you, and by the way, the cannabis sector was hot back then when that was a $12 stock. So that just tells you how far these things have come and where the valuations have come, et cetera, right? Like when we were buying FE Pharma on the first financing at 3.8 cents, the thing was probably valued at, I don't know, maybe like a couple $100 million, right, or $100 million, and now it's being valued at $1 billion, So,
well, actually, I'll show you something real quick to try to make. This is Riot, which was one of these Bitcoin stocks last year, and it had a straight up move too, and now of course it's gone back down to where it started, but most of these cryptocurrencies, when they topped out, they went straight down by January from where they were in August, and this thing took a lot longer. It's taken 9 months to get where it was. So, and the reason why stocks take longer to drop than a cryptocurrency, one of the reasons is because people short stocks, and they provide buying on the way down because they got a cover, and there's more real trading going on, and so I'm just going to repeat the idea that these things, when they top out, so say Tilray topped out today and was going to go back down to where it started, it would more likely take a long time like it did a Riot. It's not, these aren't cryptocurrencies. People really can't short the cryptocurrencies, so there's no one to buy them on the way down because they're complete and total garbage.
Well, the thing about Riot is, like you said, is that in February, 2 months after it, even after it topped, Riot was still, a $15, $20 stock, right?
Yeah,
so,
yeah.
And I think it announced it was going to do crypto stuff when it was like $3 or something, right? So like, yeah, it was still way above that. It took to. The thing about crypto is, and like, I don't want to go on a crypto hate fest, is my issue with the thing all along is you have no rights as a shareholder, right? Like, at least with Riot, if these guys, like the CEO is already, they're trying to kick him out. They were saying he was dumping stock into the spike. You can sue him. You have rights, right?
Yeah, that's right.
You have no rights if you own a crypto crap, right? You have no rights at all. You can't do anything. The guy who owns and runs Litecoin, he dumped all his Litecoin right at the top and announced it. And then idiots were still buying Litecoin. This guy sold every single coin he had at over $100, and idiots still thought this was going to go higher. And now Litecoin is completely collapsed. And do you think that, like, we all know that CEOs sell stock, but do you think that Mark Zuckerberg is selling all his Facebook stock tomorrow? Do you think Bill Gates was selling every single share he had in Microsoft? There's no way. Like, I'm looking at a Litecoin chart right now, just so you know, so I can see it in front of me. But I think it was like when Litecoin was, I'm looking at it, had a spike to over 300 back when the bubble was going on, and now it's $50, right? And this guy sold when it was like, I think around 200. He sold like every single coin he had. He was the founder. And for some reason, idiots still wanted to hold this thing, even after the founder sold every single thing he had. And remember, he had something like, I still believe in Litecoin. It's my whole life. Well, that's easy to say after you've made a few $1 billion, right?
It is pretty funny. Well, it's interesting. But the similarity is that the marijuana stocks are going up, like the crypto did last year, and I'm suggesting that they will go down differently when they do top out. But right now, there is opportunity in them, like there was in these things a year ago. This is just interesting. Here we are again. I didn't think this was going to happen, and with the marijuana stocks in the end of the year, frankly, I mean, I thought they could be topping out a couple months ago, and here we are, and they're taking off.
Actually, there's one thing just to get off all that.
Yeah, sure.
The market, which I think is interesting, is, I'm a student of history. And the one thing I can tell you is, even though I'm very cautious on the market, it's very overvalued. It's been like that for years. But the one thing I have to tell you is, I can tell you when you have one of these crashes like 1987, 1929, even like something that's not a crash off the top, like 2001, 2008, markets maybe dropping for a while, is usually you're going to start seeing weakness in September and the market roll over into October. Well, we're really not seeing that now. Today's September 20th. The S&P is now at a new all-time high as we're speaking here today. So my opinion would be, at the very worst case scenario, probably for October, is some kind of correction. But I think more than likely what's going to happen, especially with this year being a record year for stock buybacks, and those buybacks causing obviously a lot of a bullish momentum for stocks, I think that more than likely what's going to happen is we're probably going to see some kind of blow off or move here in the fourth quarter. If in the next 30 days and the market doesn't really tank in late September into late October, we're probably going to see a move higher into the end of the year, right? So, especially when the November stock buybacks start to kick in. So I think that's something also investors should be aware of, which, by the way, is why I did this marijuana deal, because I'm like, well, you know what, if I'm going to have some exposure to the market, I'd prefer to be in the hottest sector. Now, look, I started buying this deal early in the year. I had no clue that, like I just said, a stock like CGC or We.to, same, that's the Canadian ticker, would go from $12 to $65, but that's kind of where we are with it. So I could definitely see this happening, over the until the end of the year. And by the way, a guy like Paul Tudor Jones, one of the most intelligent speculators of all time and greatest hedge fund manager of all time, he said that earlier in the year, that the market was going to have some kind of fourth quarter blow off.
Yeah, well, the way the chart looks now, that's my concern, is it's kind of setting up to repeat what it did in December and January, which was a blow off. The rate of acceleration, got away from the moving averages, and I'm afraid it could do that, which would lead to a sharp counter drop back down to the moving averages at some point.
And I would say from a psychological point of view, the problem that investors are going to have is they're going to see that pullback that happened off that January high, and the January high was pretty parabolic in both the Dow, S&P, and NASDAQ. And they're just going to see this like consolidation that happened for a few months, and then another blow off, and then when the next decline happens, which maybe will start to lead to a bear market, what will happen essentially is they will be very complacent and not leave the decline, because they'll be like, oh, that happened in January, 2018, right? So why should I believe it now? And who knows? Maybe we're in a situation like maybe it won't even happen in the fourth quarter. Maybe we're like in a 29 or 89 situation, like in Nikkei in 89, where we're gonna blow off into the last year of the decade, and the 2010s will be like the 20s or the 80s were in Japan. I don't know.
Well, what month do you know?
I've been.
Do you remember what month the Nikkei topped out?
Oh, it topped out the last trading day of December, 1989.
Oh, really? That's interesting. Yeah. You never know what'll happen.
Yeah,
Well, I'll let you go. Our connection's starting to get bad, and we'll catch up again sometime soon.